You know those massive container ships crossing our oceans? They are literally the lifeblood of the global economy, moving pretty much everything we buy and sell. But here's the thing, that whole world is dominated by just a handful of colossal players. So that raises a huge question. How does a company that isn't the biggest on the block even begin to compete? Today we're diving into the multi-billion-dollar playbook of one of those companies, HMM, as it tries to chart a course through a sea of giants.
And that really is the question, isn't it? When your competitors can move more cargo, call on more ports, and basically set prices just because of their sheer size, what does your strategy for survival, let alone growth, actually look like? It's like playing a high-stakes game of chess on a global scale.
And to really get the challenge here, just look at this. On the world's most critical shipping routes, think Asia to Europe or across the Pacific, a whopping 85% of all cargo capacity is controlled by these massive shipping alliances. These are basically groups of companies that pool all their ships and resources. That leaves just a tiny 15% slice of the pie for everyone else. It is a market that is absolutely built on overwhelming scale.
So, before we can really dig into HMM's big gambit, we have to understand the world it's living in. And that world is defined by these enormous, incredibly powerful alliances.
The entire industry is pretty much consolidated around three major power blocks. You've got the Ocean Alliance, the New Gemini Cooperation, and the Premier Alliance. And these aren't just simple partnerships. They're these vast, sprawling networks that coordinate schedules, share space on their ships, and will effectively control access to global trade.
And this quote from an industry analysis, man, it just sums it up perfectly. If you want to play in the big leagues of global shipping, you need two things more than anything else: a massive fleet and a sprawling network. If you have anything less, you're pretty much locked out of the most profitable routes. Simple as that.
Okay, so let's bring our protagonist into the story. HMM. It used to be called Hyundai Merchant Marine, and it's grown from being a national carrier for South Korea into a really formidable global player. But even as a top-tier company, it's still navigating in the wake of even bigger giants.
So let's look at the numbers. HMS is a serious contender, no doubt. It's the 8th largest carrier in the world, with a fleet capacity of about 1.5 million TEU. And by the way, that just stands for 20-foot equivalent units, the standard way we measure cargo containers. It's a major force on those critical Asia, Europe, and Trans-Pacific routes. But here's the catch. Being 8th means there are 7 giants ahead of you. And that's why having a bold strategy isn't just an option, it's absolutely essential.
So how does HMM project the kind of power it needs? It does it through its own alliance. By teaming up with Owen and Youngming in the Premier Alliance, it can offer that global port coverage and the frequent sailings that big customers demand. This partnership is its strategic counterweight, letting it compete on a much more level playing field.
And this brings us right to the core of our story. Facing all this intense competition, HMM isn't just sitting back and hoping for the best. Nope, it has laid out this incredibly ambitious and very expensive plan to secure its place among the leaders. And when I say expensive, I really mean it. The company has committed 23.5 trillion Korean won. To put that in perspective, that's over 17 billion US dollars to its growth strategy by 2030. This isn't some minor tweak. It is a massive, all-in bet on the future. So, here it is, the playbook. It's a three-pronged strategy, really. First, scale up the core business. Second, become a leader in green shipping. And third, diversify into new, more stable markets. All right, let's break each one down. First up, scale. HMM is expanding its fleet, shooting for a target of 1.55 million TEU capacity. But it's not just about the ships. The company is also pouring money into physical infrastructure on the ground, like its €150 million expansion of the container terminal in Algeciras, Spain, which is a key gateway to Europe. You see, if you control the ports, you control the flow of goods. And you can hear this vision straight from the top. HMM CEO Kim Kyung-bae says the goal is to build a resilient business portfolio and become a leader in eco-friendly shipping. So this isn't just about moving boxes from point A to point B, it's about building a sustainable, future-proof company.
And that brings us to pillar number 2, going green and doing it fast. Say hello to the HMM Green. This is the first of a whole new class of 9 ships designed to run on methanol. With global regulations getting tighter and tighter, investing in green tech isn't really a choice anymore. It's a competitive necessity. This ship is a real, tangible symbol of HMM's huge net zero by 2045 goal.
Now, what's really amazing here is the raw data. Compared to regular old ship fuel, biomethanol can slash carbon emissions by up to 65%, totally eliminate sulfur oxides, 100% gone, and cut nitrogen oxides by up to 80%. This isn't some small improvement, we're talking about a massive leap forward that not only meets new rules, but also gives them a huge environmental edge.
Okay, the third pillar is all about diversification. The container shipping market is famous for being incredibly volatile. Freight rates can swing like crazy. So, to protect itself from those wild cycles, HMM is expanding into more stable businesses like bulk shipping and energy transport. It's a classic strategy, right? Don't put all your eggs in one basket.
And this slide just shows the transformation perfectly. HMM is shifting from being a company focused just on containers to becoming a diversified logistics powerhouse. The key move here is the planned acquisition of SK Shipping, which is a major player in energy transport. This one move will add dozens of oil tankers, LPG carriers, and bulk ships to HMM's fleet, fundamentally changing its entire business mix.
But of course, no multi-billion-dollar strategy like this comes without risk. HMM's plan is incredibly bold, but it's facing some pretty serious headwinds out on the open ocean.
Yeah, success is definitely not guaranteed. The whole industry is facing a wave of new ships, which could create overcapacity and just crash freight rates. The big alliances are always shifting. Those green fuels like methanol can cost 2 to 4 times more than conventional fuel. And, as we've all seen recently, geopolitical conflicts can disrupt major trade routes overnight. HMM has to navigate all of that.
So what does this all really mean? Well, HMM's high-stakes Gambit isn't just a story about one company. It's really a blueprint for what it's going to take to compete in this new era of global shipping.
The big takeaway from all of this is pretty clear. In the 21st century, being a successful shipping line isn't just about owning ships. It's about achieving massive scale through your own fleets and through alliances, proving your green credentials to regulators and customers, and building a diversified, resilient business that can offer logistics from end to end. That is the new price of admission to the top tier.
So, MHM has placed its bet. It's a comprehensive, it's expensive, and it's a very forward-looking strategy. But in an industry that's defined by giants and constant disruption, the ultimate question still remains. Will it be enough to not only survive the storm, but to emerge as one of the leaders charting the future of global trade? Well, only time is going to tell.